Welcome back to Rekt Radio, the only show on the air that helps you see the beautiful, complex machine being built underneath all the market noise. I'm Sunny, and today the signal is clearer than ever.
And I'm Cole, here to point out that sometimes what you think is a clear signal is just a reflection from a broken piece of glass. The market is a confusing place, Sunny, and chasing signals can get you cut. Let's get into the news.
There's no confusion, Cole, only conviction. And the biggest story right now is the massive comeback of a sleeping giant, Bitcoin Ordinals. It feels like the whole narrative went quiet for a while, but it's roaring back to life. Trading volume for Ordinals just skyrocketed past NFTs on Ethereum. We're talking about a complete flippin'.
A flippin'? Sunny, this isn't a combat, it's a fever dream. You're celebrating a surge in volume for what are essentially digital pet rocks clogging up the Bitcoin network. It's driven by pure speculation and a desire for novelty. Remember the last time this happened? The network ground to a halt and transaction fees went through the roof. This isn't a sign of a healthy ecosystem, it's a sign that the casino is back open for business.
You see a casino, I see a renaissance. This isn't just about JPEGs anymore. The technology is evolving. We're seeing the emergence of BRC-20 tokens, which are fungible tokens built on the Ordinals protocol. This opens up the door for DeFi on Bitcoin, for new financial primitives, for a whole universe of applications that we couldn't even imagine before. It's making Bitcoin a productive asset, not just a store of value. It's the most exciting development on the network in years.
It's the most dangerous development on the network in years. The BRC-20 standard is a clunky, inefficient workaround. It creates a ton of dust or tiny, unspendable outputs that bloat the blockchain forever. It's like pouring digital concrete into the system. And for what? To create meme coins and speculative tokens that already exist in more efficient forms on other chains. We're taking the world's most secure settlement layer and turning it into a slow, expensive, and congested playground for gamblers. It fundamentally undermines Bitcoin's core value proposition.
It expands Bitcoin's value proposition. It proves the network is more than just digital gold. It can be a full-fledged financial layer. This is permissionless innovation at its finest. People are building, experimenting, and pushing the boundaries of what's possible. You can't put that genie back in the bottle, Cole. This is the start of Bitcoin's next major chapter.
I hope that chapter is entitled How We Broke the Blockchain. While you're celebrating that, let's talk about another area where unchecked innovation is causing problems: stablecoins. The Financial Stability Board, a global financial watchdog, just put out a new report, and they are not happy.
Let me guess, more FUD from the old guard. They're just scared because they see their monopoly on money slipping away. Stablecoins are one of the most important innovations in crypto history. They are the bridge between the old world and the new, providing a stable unit of account for the entire digital economy.
They're a bridge that the regulators think is about to collapse. The FSB is pointing out that these so-called stable coins aren't being used for payments in the real economy as promised. Instead, they're almost exclusively used to facilitate trading and speculation within the volatile crypto markets. They're the poker chips of the casino you just described. They're not a bridge to the real world, they're a closed loop inside the crypto bubble.
Of course that's their primary use case right now. The ecosystem is still being built. You have to build the internal plumbing before you can connect it to the outside world. And that plumbing is becoming more robust every day. This is just the first inning. Stablecoins will eventually be used for everything, from remittances to payroll to everyday commerce. It's a multi-trillion-dollar opportunity.
But the regulators are flagging the systemic risk today. They're warning that a major stablecoin losing its peg could trigger a fire sale of its reserve assets, causing a shockwave that could destabilize the entire financial system. They're also worried that these stablecoin issuers are becoming shadow banks operating outside of traditional banking regulations, with no deposit insurance and no real oversight. This isn't FUD, Sonny. This is the world's top financial risk manager screaming that there's a bomb in the system and nobody knows how to defuse it.
It's a new system, so it needs new rules. This pressure is a good thing. It will force the industry to mature and adopt higher standards of transparency and accountability. You can't have a revolution without ruffling a few feathers. And this brings us to the core of the revolution itself. Let's pull up the technicals for Bitcoin on TradingView and see what the market itself thinks about all this.
Yes, please. Let's move away from the regulators and the speculators and look at the cold, hard data. I have the daily chart open right now. What grand narrative are you weaving today?
I don't have to weave anything, Cole. The chart is speaking for itself, and it's telling a story of perfect, absolute equilibrium. The overall summary indicator for the one-day chart is sitting squarely on neutral. The oscillators, which measure the market's momentum, are also on neutral. And even the moving averages, which track the trend, have cooled off to neutral.
And you're saying this is a good thing? Sonny, the market is catatonic. It's a flat line on a heart monitor. There is zero energy, zero direction, zero conviction. It's a state of profound apathy. The buyers are exhausted, the sellers are exhausted. This isn't equilibrium. It's a ghost town. The market is telling you it wants to go down, but it doesn't even have the energy to fall over.
You're completely misinterpreting the signal. This neutrality is the most bullish sign we could ask for after a major run-up, but you have to zoom out. Now, switch your chart to the 1-month time frame. What do you see? The moving averages, the deep, powerful current of the market, are flashing a strong buy. The overall summary, also a strong buy.
I see a massive divergence that should be terrifying to any rational person. The long-term trend, which is a lagging indicator reflecting past performance, is strong, but the present reality, reflected on the daily chart, is dead in the water. All the momentum is gone. You're telling people to ignore the dashboard in front of their face because the road behind them was smooth. That's how you drive off a cliff.
It's the ultimate confirmation. It shows the long-term holders are completely unfazed. The underlying strength is intact. This period of neutrality on the daily chart is simply the market taking a healthy, quiet breath. It's consolidating its gains, building a powerful base on top of the old resistance levels. It's the calm before the next explosive move higher. This is the definition of a coiled spring.
It's the definition of a bull trap. The long-term indicators lure in the optimists, while the short-term reality shows a complete lack of buying pressure. The market has climbed a mountain and is now stuck at the peak with no fuel to go higher. That neutral signal isn't a pause. It's a warning that the engine has stalled. And when you stall at the top, there's only one way to go.
That's all for this episode of Rekt Radio. I see a technological renaissance on Bitcoin, a financial system being rebuilt from the ground up, and a market that is consolidating its strength for the next leg of a historic bull run. Don't let the silence fool you. Stay bullish.
I see a clogged network, a systemic time bomb in stablecoins, and a market chart that looks like it's about to fall off a cliff. The lack of volatility isn't strength. It's a prelude to a massive move, and it's rarely in the direction the bulls want. Don't get trapped. You've been listening to Rekt Radio.